If you have reached a point that you are seriously considering purchasing a home, the first thing you should do right now is get a pre-approval from a lender before you start going too far down any rabbit holes on the internet or anywhere else of looking at properties and falling in love with different places and that kind of thing. The reason why is because there are really there's two numbers going on here. There's a number that you know you could afford, you know your personal situation, you know how much you're spending on rent now, you know what your income, what your inflows and outflows look like better than anyone or so. But then there's the second number. There's the first number is what you know you could afford. The second number is what the bank is willing to bet that you could afford. Unfortunately, the only number that really matters at the end of the day is that second number, the one that the bank thinks that you could afford. So that is why it is imperative right now to get a pre-approval from a reputable lender. My name is Jake Lyons. I am a realtor with App Properties here in Chicago. Also the founder and owner of the ChicagoHomeSource.com. And these are the conversations I have with clients every day. That they come, they find me through the website. They were looking at properties. They get really excited about a certain property, and then they go through the underwriting process, and they have to rearrange their expectations because they come to realize that they were looking at houses that are 800,000 and they were approved for 750,000. So, we have to kind of go back to the drawing board. So it's just best to know exactly what you're getting yourself into right away. And also, if you were to find that perfect property, you're not going to submit an offer without a pre-approval, or it's not going to get accepted and you'll get, laughed off. I am not a loan officer by trade. I have some really great loan officers to recommend you to, but that's not what I do. I'm a real estate agent, so I help you facilitate the transaction and kind of help you from point A to point Z of finding the place and putting it under contract and helping you get to the closing table and all that. But when it comes to the money side, that's somebody else. The first and easiest method to go over is, of course, cash. You still need to have a proof of funds before you submit any offers. Obviously you don't have to worry about a pre-approval or anything like that if you're not getting a loan. So you can bypass that step if that's the one workaround. If you know that for sure you can afford this because you can just look in your account and see it right there. Most people aren't. Most people have to go to a bank or some other, maybe a credit union or some other entity like that, and get a loan with the property that they are purchasing as the collateral for the loan, aka what most people would call a mortgage. So the different types of mortgages out there. So there's the conventional. You might have this notion, or I've heard out there that you need 20% down for to get a loan. That is not necessarily true. But 20% down is where you can avoid what's called PMI, or private mortgage insurance. So, if you put 5% down on a property instead of 20, the lender is going to make you have a mortgage or an insurance policy to cover their added risk between that 5 and that 20% to just to kind of have that buffer there. In general, the conventional mortgage, if you can get into that, they do have higher credit score and financial standards to get into that kind of loan than some of the other loans that I'm about to talk about. You do get better terms, tend to get better interest rates and that kind of thing if you can get into a conventional mortgage. The next most common, certainly the next most talked about, is the FHA loan. So the FHA loan is backed up by the government, by HUD. You can have a lesser credit score than what is necessary to get into a conventional loan, and also you can put a lower down payment, especially if you're getting a small multifamily unit, small multifamily building, like anywhere from 2 to 4 units. You can put 3.5% down for one of those types of buildings, which you cannot do, at least as of the time of this recording, and at least to my knowledge, you cannot do with a conventional. That's one situation where you pretty much, if you're buying a multi-unit with a conventional loan, you're pretty much bringing that 20% to the table no matter what. So that's a huge advantage for FHA when it comes to the multi-unit, and even if you're getting a condo or a house, you can still do as little as 3.5% down. You will have PMI. You'll have PMI throughout the life of the loan. With a conventional, if you have PMI, you can refinance out of it, or even just reappraise it, and sometimes they'll just knock it off once you get to, I believe it's 22% of equity. So equity being the value of your property minus what you owe on your mortgage. As long as that difference is 22% or more of the value of the property, you'll be able to knock the PMI off. Sometimes it's automatically with a conventional loan, but if you have an FHA loan, since with the FHA they'll accept riskier clients, riskier borrowers, that PMI is going to stay on there throughout the life of the loan. Another one is VA. A lot of really great benefits with the VA. Very, very low down payment, sometimes no down payment at all. And it's a benefit to people and their families who have served in the armed forces. If that's you, if you think that might be you, definitely talk to a lender about the VA loan and see if that's something that might be something that you would qualify for. But VA, if you do qualify for it, is definitely something you should take advantage of, because that's one area where the government is really hooking it up well for people who have served our country. Another one is the USDA. So that one is for agriculture. I'm not really going to go into that. I honestly don't really know anything about it because I'm a realtor in Chicago. And if you know anything about Chicago, you would know there aren't a whole lot of farms around here. And every once in a while you do see some chickens and like random stuff like that in people's yards, but I don't think you can qualify for a USDA loan with having a couple chickens in your backyard, unfortunately. There's also a physician's loan. If you're a doctor or even a resident, you can access that. There's some really good benefits to that. Very, very, very low down payments and with no PMI even, things like that. So there's a lot of different options out there. Definitely talk to a lender. They'll be able to guide you better than I can. I can, talk to you a little bit about this stuff, but once we start getting too much into the weeds, I will always defer to a real loan officer who is licensed and has the ability to really go into that. That's my spiel on why getting a pre-approval as early as possible is essential. And let me know if you have any questions. Again, my name is Jake Lyons. Realtor here with At Properties, and if this video brought you any clarity, or you liked it, or as long as you got some value out of it, I hope you would hit the subscribe button or like it or share it or do whatever the thing is on the platform you're watching this on that indicates that you enjoyed it and want some more of it. The next video will be the second step of buying a home here in the Chicago area.